Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is August 10th, Monday. And well, a little bit of rotation, I think, on the tape. Continuing from what we saw last week, and I'll give you my perspective on that. Of course, in the videos, everything that we go through is for information purposes only, not giving out any advice or recommendations, anything like that. But yeah, let's talk a little bit about the rotations. This was something that I really focused on, towards the end of last week, as well as the Tribeca Trade Group weekend videos that we send out. I made that a point to kind of come up with a watch list that was a little bit different. I still included a couple names that I wanted to watch that have been particularly strong names, but the names that I traded today were basically all from the watch list names. And what was nice about going through some charts, and I spent a long time this weekend going through and scanning on Finviz and so forth, but really just paying attention to, which is one of my strengths, is just basically looking at, first of all, looking at sectors and saying, hey, there's something different going on here. And one of which, was the that I came up with was the industrial sector, and I traded the whole sector today. So that was industrials. And what's nice, again, I think people shy away from trading the sectors in options because I think people have, well, I don't want to say people, but I think a lot of just regular retail traders are just, they're trading single names, which is fine. There's plenty of action in the single names, but what I like about sometimes trading the sector ETFs is they're not expensive to trade. Like, they're a lot cheaper in terms of implied volatility, right? If you're a little bit familiar with option trading, you know that one of the components of option trading is implied volatility, which tells you, how much, which goes into the price of the options. But, you look at something like this XLI and it's cheap compared to trading the single name. So I know everybody gets situated with, oh, this name's up, this name's up. So what I like to do sometimes is put on, the ETF and then look for opportunities in the single names. And, I noticed that there was a lot of, and by the way, I put a lot of these charts out on Sunday, and there was very little interest in some of these things, right? Like, if somebody puts out like a Fastly chart or a Tesla chart, which I did put out a Tesla chart, by the way, but it gets much more attention when I start talking about a new group that could see a rotation into. It's like, nobody really cares. On this one chart, I think I got, like, on this XLI, okay, I got 15 likes and 3 retweets, but and same thing. I talked about, like, about 3 or 4 other names, like a Honeywell, for example. Like Honeywell, okay, got 3 retweets, but I see other people, they put out, they get like 50 likes and 10 retweets. I mean, this Honeywell was a money trade today, and it was one of those things, up 2.8%. And I think that is now inside value for the year. This whole group was very strong. Caterpillar today, so this was the group today. This was up 5% today. So this was a strong one too. I didn't play, the reason why I didn't play this one was because I just saw that there was a little bit more resistance in front of it. By the way, we're going to be going over today, if you're not a member of Tribeca Trade Group, and you want to see what the hell I'm talking about in terms of when I talk about these value areas, as well as version point of controls, why they're so important in my trading, right? I'm basically looking to trade breakouts, even if they're like breakouts out of small time frame, rather than trade things that are bogged down in a range. That's what we're going through. And again, you do have to be a Tribeca Trade Group member to gain access to the market webs and to watch the webinar, which we'll be talking for at least an hour probably tonight about that. But I'm excited for that. We always give real examples, right? So we don't just go and cherry pick an example. I actually take a lot of, I'm actually asking for members to kind of give out chart examples, and then we can kind of go through these setups as we see fit. But that's where I saw a lot of strength. Again, there's a few other areas. The financials, definitely interesting. It's really tough for me to trade the banks. They did have a fine day. I think the KRE was up 1.8%. It looks like it came off the highs a little bit. I'm not convinced that the banks are going to see that much of a rally, and if it happens without me, so be it. Right? We don't have to be in every single trade. They were doing some interesting things with XLF. I don't know. This is the majority of XLF stuff that we see is a lot of this stuff far out of the money. I don't know why someone would do this, to be honest. So if we go back to this XLF chart, right, and we look at this thing, right, and I think this thing could bounce to the 200-day moving average. I think that's in the cards, right, 26. So when you look at what these guys are doing, right, this is the 26. So they're spending 23 cents for that. That's not a bad like lotto to take in case the financials happen to go berserk because they are under-owned, I would call them. That's not a bad way to look at the trade. There was like a big Citigroup trade too, which I like this chart, in terms of a counter trend trade. It's all bottled up here. But if you look, or coiled is the right term for that, but if you look at what they did today, right, you think, your first thing that your mind sees, 15,000 contracts. September 65 calls. Where's for only 23 cents? So where are the 65 calls? Where's the 55 strike? It's all the way up here. That's a big move, right? Considering now, again, it did make one of these big rips, so anything is possible. And again, if that's for you, like if you want to take, I would call that like, although it's a pretty big lotto trade, right? This is $345,000. So again, it almost makes me think that somebody is selling premium, because why wouldn't they take something like, you could still go down to like, if you were bullish Citigroup, you could still go to like the 57 strike and not spend that much money on it. It's not an expensive option. So why they would be doing 15,000 of these for 23 cents, it's a head scratcher to me. Because again, like I'll bring up the option chain here just to see for comparison purposes. But that's one to keep an eye on. They were also buying some JP Morgan and some BAC today too. But if you did what did I say, 57 and a half? You could spend $1 for those. I mean, to me, that's not an expensive option to play. And you have a higher probability if Citigroup happens to rip a little bit, because it is awfully coiled in here, and I think it could see a move up to here. I just don't know if it could see a move up to 65, right? So that's my thought process with, I'm not convinced, so I didn't. If I'm not convinced, and again, I always go back to conviction. I have to have conviction to stay in a trade. If not, I'm going to get shaken out of the trade as soon as I see a couple red bars on the tape. I have to have conviction. But hey, might be worth playing one of these at this point. So value versus growth. Let me just talk about that. I know that's getting that's what everybody's talking about today. The one thing that I would note, all these guys are, that we see, I'm not going to name any names, but we always see these guys on Twitter talk about, this is the last time, they talk about seasonality, right? And, the last time this happened was 5 years ago. Well, I always want to know this, so what? Why is that important that this is the last time that happened 2 years ago or 4 years ago, right? You see everybody always tweeting those stats out, but I never really get a trade from that. Well, I think this is kind of interesting, this value versus growth, right? I don't see anybody talking about the seasonality of this particular trade. I even CC'd the guy over at CNBC. But so if you break down, this is small cap value versus growth. Notice what happens in August and September. It has a tendency to rally value versus growth, right? So here it was back in 2016. Note, I put this in red because there was no move in 2017, but in 2018, you saw value outperform for a little bit there too. Again, not a huge move, but it's the same, it's around this August to September. Right? Here's another one. Last year it happened too. This was same thing. This was August, and looks like this happened for about a month where value outperformed growth. So look at where we are, right? Could this happen, further? I think it could, right? I mean, because previously what we've been seeing so far the last few months is you get like a 2 or 3 day rally in value, and then they buy the dip in growth. That could also happen again too. But if you zoom out on this relationship, right? So this is right. You could see that this thing is pretty stretched, And I looked at it in terms of this ETF too, this value versus growth, right? Because I've been breaking it apart, small caps, large caps. Like this IWD, IWF is large cap growth versus value. But if you just look at a couple ETFs, so here's what this looks like when you go back and you hit max. You could see how cheap value is to growth. So again, to me, I'm a trend trader, so that's not a reason just because something is cheap, it's going to definitely rally. But I'm just saying, like, I think it could happen where you get more than this 2 or 3 day. And I think for me, what I like to do is rather than guess, I like to look at the individual setups that are a little bit more value and then kind of plot out those rather than just say, hey, I'm going to take a long position in value and a short position in growth. I would rather look to see what the individual charts are telling me. That could be very deceiving when someone puts out a chart in front of you like this, when they're plotting, a ratio chart, because it doesn't just mean that one is going to go up and the other one's going to go down. You could have both go up, just one outperforms the other. You could have both go down and one outperforms the other. So there's a lot of different scenarios, and it doesn't just mean one is positive and one is negative. There's a whole bunch of different things, and I think too many people put out these ratio charts without the explanation that there's several scenarios that could play out for a reversion to the mean. Okay, so one thing that I would mention too is, I think we've been kind of conditioned the last couple months that every little dip gets bought in the growth, right? And growth names have been tremendous. I told people, we did a Q&A session, and I tell people exactly what I'm thinking, and that's I'm thinking that, hey, I don't mind playing like one or two names buying the dip in growth, but I kind of want to let this play out a little bit. And if I happen to miss, a lot of these dips that we've been seeing, and particularly in the growth area, they don't last very long. It's been like 1 or 2 days, and then boom, people are, funds are running back into these. But I want to be like, I'm okay if I miss this one a little bit. And I want to just give these things a chance to just, look at this one, for example. This has been one of my favorite names. CrowdStrike was down another 4.7% today. Notice what the chart is telling you here. So don't think with, I can't tell you what to do. But for me, like, that's a lower high that it made. And I don't know where this thing stops. Right? I know, everybody's been so conditioned to just buy a dip whenever they see one. Relax. Let it, let price kind of consolidate a little bit. I think that a lot of traders on Twitter and so forth, and again, I'm not criticizing newer traders. I'm actually really trying to help. So I don't mean to be negative, but I think as soon as you see some red, and it's not just newer traders, this has just been the habit, but they want to rush in as soon as they see some red on the tape. Oh my God, I finally got a dip. Now, if your time frame is long, then it could be great for you. But if you're doing kind of what I'm doing, which is basically, swing trades, both short-term and medium-term horizon, could be anywhere, let me define that, anywhere where I hold for a few days to maybe like a month. I want to let this thing actually settle in a little bit, and let's see where it goes. Maybe it takes, I think first of all, this version point of control is sitting right here. Maybe it gets some support here. But notice what it's done here. It's broken. You got a sell signal. The 5 period has crossed below the 20 period moving average. That's a textbook sell signal, right? It's also broken the 50-day moving average. It's also broken the bottom of value. So where does this go down to? I couldn't tell you. I think you have to let it digest a little bit. I would like to see it bounce back into value, but I could show you a bunch of charts that look this way. And you've got things down here, you've got version point of controls that this thing could further break down. And when this happens to me, the other thing that I try to illustrate on Friday was when this type of thing happens to me, when I get caught in a long or two, that gets sold off, starts to get sold off like this, I just get out of the way, right? Because when I do that, number one, I'm not taking a big loss. I'm taking a small loss, and those are fine. Those aren't going to blow up my account. And then what I do is then I just reassess. And it feels like sometimes when I take that position off, it's like a weight's been lifted off my chest. I can look at the chart and I could be a little bit more subjective and I can relax a little bit. So the one thing that I wrote in here, right, as we're seeing this kind of rotation, is the advantage to a retail trader. You don't have to be a perma growth trader, and I know that's worked very well. You don't have to be a perma value trader. You could take the setups and like sometimes you have to cover up the symbol a little bit to do that, but you don't have to do you don't have to stick to the FANG stocks. You don't have to stick to the software stocks, right? Just because, if you've gotten comfortable in those names, that's fine, but let them do their thing. So for me, again, I'm going to let these things digest a little bit, and I'm not in a rush. I'm just not in a rush to buy these things just because I see a little bit of red on the screen. I like to wait after, things are kind of coming down or closing on their lows. Sometimes, again, the way this market has been functioning is buyers come right back in and it's worked a lot of times. But I want to wait for a little bit of confirmation. Now, I did buy one today. I'll give you the one that I bought today. This is SE. It took out, a couple things that I was watching for. But I still have a stop price in here. So I took a shot in one. But everything else, they all look similar to me. Notice that this thing stopped on the top of value too. So now, if it doesn't hold this, unfortunately, it's down to the 50-day moving average, right? So you have to ask yourself, if you're sizing the trade appropriately, this may be okay with you. You put on a little bit here, and if it breaks, then you add a little bit here. Or if you put on too much here, then you got to take your stop, right? If it doesn't hold, I think that's another thing that traders have a tendency to do is they don't plan out their trades as soon as they get into them. And number two, once there is a stop, they don't press the button. Oh, I don't want to sell here. That's a loss. I'm locking in a loss. So that's another, I think, big fallacy of traders, and that's how they turn small losses into big losses, right? That's the whole key of trading, is to have big wins and small losses. But if you let the losers ride and you're constantly cutting off the winners, then that ratio is not going to work for you, and it's going to be tough to be a profitable trader. So in my opinion, don't get hooked into saying, "Oh, I have to be right," and I have a loss. I have a loss on my on my account. Get over it, right? Every good trader and good risk manager is going to have some losses. All right. So again, I'm not telling you to sell everything. I just, these are lessons to learn as you're going through trading. You have to, again, this is where you separate the boys from the boys from the men and the girls from the women, is by being able to make these decisions and get over it and know that your trading system is actually better than one individual pick. That's how I do it. That's how I've been, have kind of used that disciplined approach over the years. A couple other areas that showed some strength. We talked about this one last week too. It's funny. So many of this option activity, that some of it is early. But a lot of it is late. We talked about this XME chart last week before the option activity. I think this thing goes to 26, right? Another under-owned area of the market. So, I think there's a couple things that are interesting here and that can continue to run. But I'll tell you, so many of the option activity, like this one, we did see a little bit of calls that went up on Friday in DuPont, which I think could run to 60.54. But, out of this is really nice. I talked about this trade before earnings, and I took it off before earnings because I didn't want to hold it through earnings. And then it really didn't do anything, and then all of a sudden it's popped out. But this is a good one. They did buy a call spread and a little bit of calls on Friday, so they caught this one right. But I'll tell you, half the stuff that we see, you can find these setups before you see all the, there's Caterpillar calls today, but again, all this stuff, if you do your research, and that's kind of what we do, is do the research. You can get into these positions before the call buyers come in, because half the time these guys they're chasing all the time. Sorry, I said that wrong, but they're chasing a lot of the times. Starbucks, I think, is a really good setup. Right, up 2.2%. So, here's the trade blotter for the day, and this is kind of how I'll end it because we're doing a webinar for the day, and this is probably talking enough. But where's Slack? What did I do with it? There it is. Um, but yeah, these I went into I couldn't get into every one that I talked about in during the weekend watch list like Honeywell, but CSX I started Starbucks I started and I traded XLI too. Again, it's tough to start like 4 or 5 trades, so that's why I kind of toned it down a little bit. But I think the analysis that we did this weekend, giving myself a pat on the back, was pretty good. So I'll leave it there, and I hope to see you guys all in the webinar shortly in about a half hour. Thanks, guys.